In this series, we have gone deep on everything execution. We've looked at order flow, structure shifts, internal range liquidity, those different points of internal range liquidity, how to take entries, where to put your stop loss, how key levels support our trade, everything through to lower time frame entries. So if you haven't seen those videos, go and check them out. But now I want to bring this all together to give you a framework that you can use to take your own high probability CRT swing trades. We are going to execute on the 12-hour in line with our weekly, 2-weekly, and monthly trade ideas. And this is along on EURCAD that actually played out, and I placed a trade using this exact checklist in the last couple of weeks. So here's our checklist, and this is just recapping on what we've already talked about. So first and foremost, we need a higher time frame context. We need alignment between candles to give us enough confluence and confidence to take our trade. Then we need to see structure aligning, so price action, market structure, or order flow forming in the direction of our trade. We then need to map the internal range liquidity in our price legs to then take a valid entry. And we need to create a stop loss that works in context of our higher time frame trade execution. If possible, we also need one key level minimum, or at least, or sometimes two key levels. The minimum key level we need is a higher time frame candle manipulation. We need to see manipulation. No manipulation, no trade. And if we have internal range liquidity on higher time frames, then we can have confidence that our trades are going to run beyond those higher time frame targets. Targets, once we have all this, will take care of themselves. So let's take a look at what happened with EURCAD and how you could have got involved. So first and foremost, we have a monthly candle range right here. So this is our 12-hour price action. It's bearish. And we have a monthly candle range. So what happens is that the monthly candle closes at this point here. And what we instantly get is a shift in structure right here. So just so I can map this for you, we have price action, which is moving down, and then price closes at this point. This closes the monthly candle. Price then tries to go lower. Importantly, we don't liquidate the previous monthly low. What happens is that we trade up instantly and take out this swing point. So we've got a structure shift, but on the monthly time frame we have no manipulation. So at this point it was interesting because we saw price action shift. We didn't have a manipulation on the monthly time frame. So let's take that away for a second. Then we look at the 2-week time frame. So in closing this monthly candle at this point here, we liquidated a previous 2-week candle. So this was a 2-week accumulation candle right here. Price moved aggressively and liquidated the low of its previous candle, and importantly closed inside that candle range. So while we don't have a target on the monthly time frame, we do have context on the 2-week time frame. So we can mark that right there. Then we want to look for additional confluence. So we look at the weekly time frame. Okay, we have the exact same thing. We have a weekly candle right here. Price is trading below its previous weekly candle. And at the close of the monthly candle, we also get a confirmed manipulation or liquidation of a previous weekly candle right here. So we also have a weekly target. So this is the high of the 2-week accumulation candle. This is the high of the weekly accumulation candle that price can now target. So I mentioned already that we had this movement right here. So what you basically see is that we create a buy to sell that never gets closed through. Then we create another buy to sell that again does not get closed through. Then we get bullish price action. What does that then create? order flow. So if we come back here, we have nothing on the monthly, but we do have alignment on the 2 weekly and the weekly. We also now have structure aligning. So what does that mean? Well, we have an order block here, which we can mark as a 12-hour order block. But importantly, we also have a bullish fair value gap at this level here. So this is an inefficiency between candle 1 and candle 2. We also have a manipulation, and we have higher time frame targets in place. So let's come back to our checklist. We have structure aligning. We have IRL mapped. We have the order block, the last sell to buy, as well as our bullish 12-hour fair value gap. Stop loss. Okay, so if we're going to take an entry, we want to enter from the fair value gap, and we can either cover the swing point or the liquidation of the previous candle. So there's the candle on the weekly. Let's take a look at the 2 weekly. Okay, it's there. So this is essentially covering the swing point and the previous monthly candle. We can just drop this slightly to cover the liquidation of the 2-week candle. Okay, so we have now entry IRL mapped, stop loss in context, and from a key level perspective, we have at least a manipulation, because we see one manipulation, and if we bring back the weekly time frame, we have 2 manipulation candles. We want to trade to our 2-week target. So we have everything starting to line up now. We have key level, we have a target, we have everything in place to take a high probability trade. One last check before we get involved on the monthly time frame. It makes sense, while it's not ideal, that we won't, this candle can open and it can instantly move lower. But if it does that, it hasn't created yet a top wick. So even if this was to play out, this can be the top wick of the candle, and then we can go lower. So it makes sense that price will want to retrace first before going lower, given that this candle closed below its previous candle. So the monthly is not ideal, but it's still in context. So now we have everything, but to the target 1.86. It might be worth actually bringing this up to cover this manipulation, because now we have a 2R trade. So now we have everything to take a high probability 2R trade in the market. What happens? Price stings in to the fair value gap, trades away. Then we get bullish aggression in the market. We then get the formation of another sell to buy, a new price leg. So sell to buy, sell to buy, sell into the order block, and then price takes the target. So this is how to take high probability confirmed swing trades using this checklist. You need to be somewhat creative. You need to be attentive to how candles are closing. Once you get an eye for this, it's something you can do very quickly every single day as these candles print. Once you've seen this, you cannot unsee it, and you can take consistent high probability trades in the market. Now, next up, we're going to look at trade management. And this is where it gets even more interesting, because if we look on my trading list, I'm not just trading one pair, I'm trading 30 plus pairs. And the reason you can do this when you're using this type of framework is that you can spend more time analyzing and less time trading. So truly understanding the intention of price. And so opportunities present themselves literally every single day. Looking forward to the next series, and I'll hopefully see you there.